Hello traders, this is Brian from FinancialTradingJournal.com and welcome to this week's FX Weekly Analysis. Today is Saturday, June 15th, 2013. So let's get started. So first up we have the dollar CAD. Before I start, I just want to mention that the weekly trend line that I had drawn, this one on top, was only drawn from recent highs. I don't know why I extended it all the way back there because it kind of did touch the high over here, but it doesn't fully touch it there. Technically speaking, this trend line should have been drawn to something like this instead, so that it went from the highs from, this was November 2011. The real trend line is something that's drawn like this, connecting this high here, that high there, and the recent high. And this would have been a more proper trend line so that you can tell that this is an actual bounce down, and it wasn't actually a breakout of the symmetrical triangle. So that's a mistake on my part. So after having drawn the new weekly trend line, everything should make sense going forwards now. So I just wanted to point that out. So now that that's pointed out, I'm going to delete this other trend line because this is voided since we broke that high, so that we only have something like this. So on the monthly scale, we have not broken the symmetrical triangle yet. So until we do break out of this, we don't have a move. So basically, the long-term forecast will be changed back to unclear on this pair because we're still inside the symmetrical triangle. So that was just a mistake on my part. So there's nothing else to say there. We having drawn the new weekly trend line, you saw that we bounced at the end of last month up there, bounced down to here. We're almost near the bottom trend line now, so it could potentially still touch the bottom, voiding the bullish flag that I mentioned in previous weeks. So let's talk about that as we zoom into the other time frames. So moving to the weekly chart, as you can see, this is more clear of how the weekly trend line is drawn. It's drawn from that high right there, that high right there, and that high right there, and this is pretty much spot on, right on the price of those highs, and price bounce down from there. So we are projected to move to this bottom trend line here. So that's all the weekly time frame is supposed to show. On the daily chart, what I want to show is what the bullish flag that I wanted to happen about 2 weeks ago. 2 weeks ago, this is what formed. This was the original flag from 2 weeks ago. And last week we had that, I mentioned that we still had a flag, but that price punctured it. So it wasn't a perfect flag. But 2 weeks ago, this is what we had. We had the flagpole and then this small flag. And that's typically what you want in a bullish flag. You want a long flagpole and a short flag. But right now, as you can see, price is continuing down. And this week it consolidated over here, as we'll talk about when we zoom into the H4 chart. Basically, it's not looking like a flag anymore on a daily time frame. It's looking more like an actual reversal. And based on the weekly time frame of the weekly trend line at the top there, we could potentially just go back down to here for a bounce point on this weekly trend line at the bottom. If it bounces there, that will potentially form a double bottom if that happens in the next couple weeks. So moving on to the H4 chart, so this is what we wanted, a flagpole here and the flag over here. And this was 2 weeks ago. And then last week, what happened was, I mentioned that we had a flag and we continued downwards, but we punctured upwards, so that wasn't a perfect flag anymore. So I erased that flag, and now I have drawn a bearish flag, a mini bearish flag, inside of the bigger one that was not perfect, so that we have something like this. And this is basically what happened in the markets this week. We just consolidated within the flag that formed. And also, in addition to that, we broke the 61.8 level, which I mentioned last week, for a potential bounce point in the imperfect flag that was supposed to bounce but didn't bounce. This flag will reinforce the weekly bounce at the top to potentially hit this bottom trend line here for a potential double bottom, so that you have a bottom here and a bottom there, and then maybe it might bounce up like so. So that's it for the dollar CAD. Up next we have the Aussie dollar. Aussie dollar monthly chart. As you guys can see, we did manage to puncture the bottom support level. I think we punctured by about 50 pips. We broke down the low. So the low here was, what was the low? 24. So we punctured down about 75 pips. And that happened on Monday, I believe, if I recall correctly. That was a holiday in the Australian markets. So it was holiday, low liquidity. No surprise that it broke through levels because no one was trading that day. So that's not really a valid break, because unless it broke with high volume on a regular trading day, that would be a valid break. But breaking on a holiday doesn't really mean much, which is why as soon as the next day opened, price just rebounded right back up. So on a monthly chart, currently we are 2 weeks into this month, and we now have a doji on the monthly chart. So depending on how this month develops, we might just reverse right here, but we do have a potential fake puncture. So we'll see what happens in developing weeks. As I mentioned last week, we had 5 consecutive red candles. So there was a potential for a green candle coming up, because you can't go consecutive for that long. And we did get that this week. We got a green candle this week. Now the question is, do we continue green or do we continue down? Because we're still in no man's land right here. So there's nothing much else to say on a weekly time frame as far as that goes. Going to the daily time frame, we are still inside of the bearish flag that I drew last week. The flagpole is there and the bearish flag is right there. We did not quite reach the top trend line, so that is a potential target that we could hit in the beginning of this week and possibly bounce down or bounce up. That will be the pivot point, if you will, for this week. So moving to the H4 chart, there are a few things I want to point your attention to. I think midweek on Wednesday, yes, this is the 12th. On Wednesday, we hit the 50% fib level and we bounced down. That was a potential point of reversal. 50% levels I found on the long-term scale is more popular than the 61.8. You can expect some reversal power, I guess, come in at the 50% level, but that's not where the real reversal comes in. Usually comes in at 61.8. But the 50% level, that was an interesting level to watch, and I traded that this week. That was pretty much spot on. It hit the 50% level. It hovered there for about an hour or two, and then it just dropped. It dropped a total of, I believe, 100 and something pips, 115 pips. So that was a pretty nice swing trade. I didn't expect it to last very long because it's just the 50% level. It's not the 61.8 level. 61.8 level was up here, but that one, it punctured. It did bounce initially, as you can see on this first candle right here. I'll zoom in. This first candle right here, it did puncture, and then it went down. But then the next candle went right back up. But then it got stopped right here on this trend line that I drawn from there, and there. So this was a point of area of resistance, if you will. But this is not the real resistance. The real resistance is up here somewhere on this aqua trend line, which is the top daily trend line of the bearish flag. Up here, I don't have the fib lines drawn because I don't use that fib tool. But the 78.6 level or 76.4 level, depending on which level you use, is somewhere up here in this area. I think it's somewhere up here because this is the 61.8, so halfway is 80, so 80 is right here. So 76, 78 is somewhere over here. So this is near the aqua trend line. That would have been the perfect bounce point. So we could continue up. If you were to draw a trend line, you would have something that looks like this. So we could be bouncing up next week to up to here somewhere and then bounce down. And that projected path can be seen on the annotated charts on my website. So for those of you guys that don't know, the analysis is all in video form, but the charts that I annotate are still on my website. So go to financialtrainingjournal.com, click the FX Weekly Analysis tab on the top right, and then on there you'll see the annotated charts where I draw projected paths for the next week. So projected paths are where I think price will move. Obviously, it doesn't move in a straight line, but that's the general movement of what I think can happen in the markets. So yeah, so that's it for the Aussie dollar. Up next, we have the euro dollar. Euro dollar, again, just like previous weeks, I really don't have much to say for the euro dollar because we're still just floating in the middle of nowhere. There's not really any lines. If we continue on the current path, we could retest this trend line that broke, which would actually coincide with the top here, because depending on what projected paths you go, because remember, this is the monthly chart, so we have 2 weeks left. This green candle in the next 2 weeks could just bounce up green, and then it could hit right there, which is the high there and the weekly trend line. But if it's the next month, then it would be somewhere up here, so depending on how long it takes price action to get up there. So there's nothing else to say there as far as the monthly chart goes. Zooming in to the weekly chart, last week I mentioned price broke out of this range and that price pulled back and that we were waiting for the pivot point, if you will, the top trend line, to see what happens if price continues up or continues down. And it did go up, so that was more of a continuation confirmation play of price action breaking resistance, which eventually became support, and it went up, as you guys will see when we zoom into the daily chart. See, daily chart, I mentioned that we broke this green candle right there. That broke out, punctured it. The red candle was a pullback, and then this right here was a potential long entry to continue up. So that was confirmation play on price action. But I also mentioned that we might get stopped by the 61.8 fib level, which I mentioned was a 13341 level, which is right here. That did get hit this week. It got punctured, and we're currently sitting right around that level. So it's still unclear as to where markets want to go right now. So that's it for the daily level. Moving on to the H4 level. So on the H4 chart, what I want to show was that we broke outside of this upward channel. This upward channel, as you guys can see, has been going on for 1, 2, 3 weeks now. 3 weeks. We did puncture it several times here, once here as well, but that one closed above. This one punctured and it closed below. Currently right now price went up and it is closing right there. So technically speaking, if you're trading resistance levels on a trend line basis, it broke the bottom trend line, which was supposed to be support, which is now it's going back up. It should act as resistance going back down. And this also coincides with a 61.8 fib level, so it could be reversing next week for a potential downplay, and because we've been going off for 3 weeks now, so it could just drop after this. So going forwards, what has to happen is this 61.8 level has to hold, and this trend line has to hold as well, because if it goes back inside the channel, then usually what traders do is they trade a re-entry into the channel, and that could continue up. As long as it doesn't make new highs, but the highs are tested, it could potentially still drop. But again, that will be drawn on the projected paths on my site. So that's it for the euro dollar. Moving on to the pound dollar, last pair. So for the pound dollar, what we have is this weekly channel that I mentioned in previous weeks already. The only thing I will have to say for the monthly chart is that we are closely approaching the monthly trend line that was broken. This black one right here. We are about, what is this? This is about 150 pips ish away from there. But compared to the high of this week, which was around 1.5735, something in that range, we were about 115 pips away from testing the monthly trend line. So we were pretty close on a monthly scale. But on a weekly scale, not that much. If you're zooming in here, on the weekly scale, what we had that we hit this week was the 61.8 fib level, which I didn't think would have hit, because last week I mentioned we formed this weekly trend line. So as I mentioned, this was the original trend line down here, which I created a parallel line up there, and that we had last week's candle, it touched the top, and then I thought it would just keep going down. But this week what we did was we went up, we made new highs, and we retested the trend line. Is still inside of it though right now, and it's coinciding with the 61.8 fib level. So going forwards, assuming it goes down, the channel will be in play, but it has to go down for that to happen. So until then, this top trend line is an unconfirmed trend line because it hasn't bounced yet. Technically speaking, it should go down a few red candles for it to be a confirmed weekly trend line. But it also coincides with the 61.8 fib level, so it's pretty good to go down. On the daily time frame, what I want to point your attention to is we have a hanging man pin bar at the top here, which is basically a hammer or inverted shooting star. I don't know, pin bars are kind of a gray area because there are different names for different places of where they may occur, but the general definition is a pin bar at the top or bottom of a trend is a signal for potential reversal if you get a confirmation candle on the next candle. But depending on where they are, they have different names. So I'll just give a brief lesson on candlesticks right now. This top one right here is a hanging man because it is a hammer at the top of a trend. So that's a hanging man. A hammer is what you find at the bottom. So this is a hammer right here, this one. So that's a hammer at the bottom. But if you get the same candle at the top, that's called a hanging man. Then you have the shooting stars, which look something like, here I'll zoom in actually. Shooting stars look like this, where you have a long upper wick and a small candle. That's a shooting star. At the top, this is a better candle than a hanging man, because hanging man shows there's bullish power at the bottom. This shows bearish power at the top. Typically speaking, you want this and you want this. You don't really want this. And then at the bottom, if you find something that looks like this, a shooting star at the top, at the bottom, what it's called, I think it's called a morning star. But these are just the names if you want to go research on candlestick formations. You have hammers, shooting stars, morning stars, and hanging man. Those are the 4 typical reversal patterns based on pin bars with long wicks and small bodies. But that's all I wanted to draw your attention to. We have a hanging man right here at the top of the weekly trend line, which is projected at this point, and it's also near the 61.8 fib level, which hit and it bounced down. But we're waiting to see what happens in the coming days to see if it actually continues movement. If it does continue moving down, we're projecting somewhere down here at the weekly trend line at the bottom. Depending on how far down it moves, it could potentially be a 500 to 600 pip move, because we're up at the 1.57 level up here. We could potentially move down to, depending on how fast it moves. If it moves down immediately, then we're projecting the 1.51 level, which is right here, or the 1.52 level, which would, if it takes longer and it comes down like that in a 45-degree angle or a 60-degree angle, depending on how steep the trend is. So let's see what happens in the developing days. Lastly, on the H4 chart, the only thing I want to show was we broke the trend line, just like the Euro USD. We broke this upward trend line, which has been moving up for 1, 2, 3 weeks now. It broke this, it closed below, and then it retraced back up. We're currently right at the H4 short-term trend line, plus the weekly trend line, plus the 61.8 fib level is right above this. So it has a potential to go down. So this area right here, I would label it a pivot area, not so much a pivot point, because pivot point is just calculations of different points or lines. This is an area because there are 3 things that cross right here. So depending on which way it moves, it could be a big swing in either way, but we're projecting downwards. That's what I'll be drawing on the charts. So that's it. That concludes this week's FX Weekly Analysis. Hope you guys enjoyed it, and I will see you guys next Saturday for next week's FX Weekly Analysis.